Hi guys, welcome to another honeystocks.com weekend analysis for the 27th of January 2020. Now, most of you will already know that I've been traveling around the world for the last, feels like ages, last few months. Thanks to everybody that's kind of reached out to me, just because I think most of you understand that I've been traveling around Asia, been in Hong Kong, Tokyo, etc. I made the decision a few days ago to actually leave Hong Kong just because of the coronavirus, and I got a flight back to the UK. So I'm back in the UK at the moment until things settle down. But I do plan to go back to Asia quite soon. I thoroughly enjoyed the experience and love everything about it. So yeah, to everybody that was concerned about the coronavirus, I'm absolutely fine. Now, as always, I've got a heap of stocks for you this week, and everything's backed up with technical analysis, but you've all seen this before. I'm not an investment advisor. There's not any recommendations. Do your own due diligence, and you are solely responsible for any positions that you wish to take in the market. Most of you already know that I'm registered with the CMT Association. Technical analysis is what I'm widely known for, working my way towards chartered status at the moment. And I have a lot of stocks, like I said before, that I'm going to be running over. I think the one thing that I do understand is that, especially towards the end of last week, the emails ramped up a little bit, the messages on social media ramped up a little bit, asking what was going on, what we can expect. So I know there's some of you out there that maybe are struggling with the mental hurdles of, perhaps a declining market or the odd red day in the market, which I have to say is perfectly reasonable behaviour for price. But I am going to be talking a little bit about that today as well. Now, what you do have to understand is it's a massive week for earnings. We have a lot of the big hitters. We have Apple are reporting. That's obviously going to be massive. Semiconductors, AMD are in there. Boeing, I've got that chart prepared today. We've got Tesla, Microsoft, Facebook, PayPal, the Amazon. So this is a massive week, guys. And I think the message that I really want to get across to you today is make sure you've got a plan of action in place for each of your positions. If your existing positions are reporting earnings, maybe you're not doing so well on the stock, maybe you don't have enough profit in place, etc. I'd ask you just to kind of, get a plan, figure out if you want to hold through earnings or not, because we can see, large swings in price, especially if we have an earnings miss, and obviously a decline, and you're obviously caught on a gap down. There's nothing worse. So, please do, get a plan of action in place if you're technically minded. In the bottom right hand corner, you should be able to subscribe to us. We do try to upload once every week, and sometimes, if time allows, maybe twice, but mostly it's once a week that we like to kind of communicate our thoughts on the market. And if you are somebody that struggles, or maybe you want to have access to our premium charting, etc., I'll be walking you through this at the end. But let's just dive into the charts, let's dive into the markets, and let's see what the charts are telling us. Now, what you need to understand is the S&P 500, and I think that's actually a good place to start. Actually, let's start with the S&P 500. Now, the S&P 500, and I highlighted this one last week both to our premium subscribers, and also I think I maybe included this chart with social media as well. Actually, we're meeting a logical level where there are going to be question marks asked of price. Now, what we're seeing at the moment, perfectly reasonable. We're meeting a little bit of resistance in the S&P 500. It doesn't mean that we're going to correct. It doesn't mean that we're going to have a massive meltdown in the market. It just means that the market is poised to take a little bit of a breather before taking the next leg higher. That's just the technical view, okay? Now, that's the daily chart for the S&P 500. Now, when you switch over to the weekly chart, it actually looks a bit cleaner. potential market resistance. So this little decline that we've seen towards the tail end of last week, fully expected, and it's really just a signal to just say, do you know what, let's keep a close eye on our positions, let's manage our risk appropriately, let's not go overboard, let's not get caught up in the euphoria of an advancing market, which we all love. I think the message at the moment is, until that level clears in the market, I think it makes sense to be a lot more selective with your positions. I don't think this is a time to get aggressive, especially with equities, tech, financials, etc. I think it's actually a time where you might want to just kind of take a step back. Obviously, there's been lots of gains over the last few months, and it makes sense to just manage risk a lot closer, in my opinion. Now, step back to the relative rotation graph here. Now, there are areas of the market that are starting to advance that are typically associated with defensive action in the market. Now, there's one area that I'm going to highlight to you, and that's utilities. Now, there are many other areas that I've highlighted already to our premium subscribers this weekend in another analysis video that I've done. But, I think if you concentrate on utilities, that's one area that you might want to consider. And, we're seeing broad participation from the big utility companies. I think, AWK comes to mind, SO, Southern Company comes to mind. So when we have these sectors breaking out, these defensive sectors, what we can often anticipate is a bit of a decline in the more popular areas, the tech stocks, the semiconductor stocks, you know the ones I'm talking about. But that's really what we're seeing. We're seeing iPay, the payment processing companies, they're still advancing. And yeah, I think we are seeing a definitive rotation into these defensive areas. Now, obviously, when we get these rotations into defensive areas of the market, our overall goal is to always, beat the benchmark of the S&P 500. So when we get these rotations into defensive sectors, yes, I accept that they're not as fast moving as the momentum tech stocks, but when we get that rotation into things like utilities, those areas will start to outperform the S&P 500. And when we look back over a 12-month period, we can look back and we say, yeah, we've moved into that sector at the right time, we've accumulated profit, we've outperformed the S&P 500 there. And you'll always move back into these tech stocks, but it's just about understanding when it might be appropriate to kind of start to look to other areas of the market. Now, individual stocks. Now, I obviously get a lot of requests on a weekly basis through all my social media channels, and I do try to select the ones that keep cropping up. There are a lot here that certainly I talk about them quite a lot because they're requested quite a lot, and they're just popular stocks. But EHTH is obviously a stock, and I don't know if any of you seen my post on social media a few days ago. This is a stock that one of my clients, one of my subscribers got in on down here. A huge move overnight, obviously, with the earnings gap up, and that was an $8,000 profit. Now, I think what we have to say here, now this has the potential now to start to move towards that 150 level. Now, we're not massively overbought at the moment, but I think given that it's obviously an earnings gap, I think we can probably expect some kind of pullback before it starts to advance higher. I think, what happens with the overall market will be absolutely key to this as well. But I do think with EHTH, I think you just have to manage this to profit now. Obviously, you don't want to lose all the gains if we come back and fill this gap. I think you just have to be happy with how it's gone, but obviously just manage risk, manage the trade to profit, and happy days and congratulations to everybody that held through there. Starbucks has earnings this week on the 28th. This is a position that I have just profit taken on Friday on this. I don't really like to hold through earnings, and for those of you out there that are obviously taking a long-term fundamental mindset, the stocking is a good uptrend. There's nothing wrong with the stock. Just because I've sold it doesn't mean that I'm bearish on the stock. It just means that I don't like holding through earnings and I don't like the earnings gamble. So whatever happens here, if we get a positive earnings followed by a decline in the stock price, provided there's nothing wrong with the guidance also, I would be looking to buy any weakness in Starbucks. I'm very much looking to get back into Starbucks. I just want to see what happens with the earnings before making any judgment. I do take the opinion that I'd rather have more information than less information, and I will have more information after earnings, so that's the path of least resistance for me. Now, Facebook, obviously earnings coming up. Now, this would be the concern here, a potential failed move, failed breakout potentially. I think if we get positive earnings, however, that would be rendered obsolete. I think if you're out there and you've just allocated new money to Facebook, I think that's where the danger would be. If you're somebody that's been in Facebook and you've maybe bought in down here or down here, great. But it's not a place where I would be looking to allocate new risk in the run up to earnings. And if you're out there and you're currently in the stock, this would be the concern. Nobody knows what's going to happen with earnings. Anybody that says that they do know has absolutely no clue. It's a complete lottery, in my opinion, what the reaction will be to earnings. We can all have our forecasts, and quite often the forecasts can be correct, but that is not what matters. What matters is the Wall Street reaction to earnings, and nobody knows what that's going to be. So that would be the concern with Facebook heading into earnings. Okta, we're pushing up against resistance, potential cup and handle pattern forming here. I think if we get a breakout here above this 131 level, I think we could probably start to move towards 140 fairly quickly. CYBR, this has been huge for many of our subscribers. It's now fast approaching a profit target level around 150. So if you're out there and you're in CYBR, just be mindful of the previous resistance that it's had, dating back to last July. And I think almost profit target, almost hit. The Match Group, this is a stock that's meeting resistance, again a logical level of resistance. For those that say that technical analysis doesn't work, this is just another prime example of why it does work. When we push up against former highs, former resistance, we can anticipate this, we can tighten up stop losses, protect profits, and we can just revisit it another day. I wouldn't be looking to kind of buy this dip at the moment. I don't think it would offer any kind of risk to reward. So I think if you set an alert, maybe for $90.50, if we can get that breakout with continuation, Match Group might be interesting then. Now, big questions being asked of Netflix at the moment. A lot of you will understand that I've highlighted this triangle pattern for what feels like 6 months now. Now, for those of you that are in there at the moment, you need to be watching this level very, very closely. The last thing you want, especially if you're holding options, is for time decay to maybe hit it. Obviously, if you're buying the stock and you've got a fundamental view, I fully accept that that's a completely valid way to invest your money. Technically speaking, the concern would be that if price does this, which is entirely possible, then you could be chopping about sideways for another 12 months there. This little space here actually represents 12 months because we're looking at a weekly chart here. So I do take the opinion that if you're in the stock at the moment, unless you get this breakout in Netflix, I don't think you can do any more than hold to this line. That's my opinion. If it breaks out, by all means, buy back in again. But I think for me, there is a potential for us to chop about sideways unless we get a breakout in the next week or two. So big questions being asked of Netflix, and I really wanted to highlight this one this week for you. Etsy, again, it's just hovering around a logical level where we were expecting resistance. I think if we can get a breakout above this $52 level, I think Etsy then becomes massively appealing. Amazon reports earnings this week. Now, again, very, very similar in some respects to Netflix, where it's kind of just in this holding sideways pattern. It's chopping about, it's bouncing between ranges. The range isn't massively wide, so it's not been offering any kind of entry or risk to reward proposition. But I think what you should do with Amazon, and again, taking into account that you want to trade with more information than less information, given it, I think they report, I think it was on maybe Thursday that they report, if we get a positive earnings announcement and obviously a favourable reaction, I think for allocating new money, I think above $2,000, I think above this level would be a really good place to maybe buy into Amazon. I think if we get above $2,000 with Amazon, we'll probably start to see the overall market start to take the next leg higher as well. So, absolutely, I think that there's big question marks here. There's a lot riding, I think, on Amazon and Apple this week. So, absolutely keep a very close eye on those. Twitter, we are in an uptrend with Twitter. Now, for those of you that maybe don't know, this is a stock that I sent a trade alert out to my guys. I think it was around 10 days ago or so. Around $33, I think, was the alert. We're at $33.19. We did have an initial spike in price. It has pulled back a little bit, but I think that the message that I've kind of given to my subscribers and obviously clients this week is this is the level to watch. I think if we break below this level here, then that would be the concern for me. And we might want to just say, let's not take any chances. Let's cut the trade early and let's not take any big losses on it. I think that would be the message with Twitter. We can never be 100% correct 100% of the time. And I do take the view that with Twitter, especially if we can, if price does start to break down, if you've entered at 33 and get stopped out at, 32.75, that I consider that a win. But absolutely, I would be managing risk a lot closer with Twitter if you're out there and you're in it. Yeti, a few people have asked me about this week. We did get a little bit of a failed breakout here. This should be the caution to everybody as to why you shouldn't really jump in on a breakout intraday. It often gives false signals. What we're really concerned about are closes above a given level. And for me, I think Yeti, I think if we can get another couple of dollars of upside next week and we can get a confirmed breakout, then I think Yeti then becomes interesting. If you're in Yeti at the moment, maybe you're holding a long-term position, I think this is a key level that you may wish to just kind of keep an eye on. Now, excuse me. I think Lyft is another one that we need to keep a close eye on here. I think we are very close to getting a breakout here. Obviously, it's a recent IPO. We've just had the moving average pop up. So I think for us, I would just be waiting for that potential hurdle to clear before allocating any risk to that one. I think around $51, $52 would be an area that we may want to just kind of keep an eye on. BYND, now that this has been massive for many of our guys, our clients, subscribers. I think the thing had a 35% move in a couple of days when I highlighted it a couple of weeks ago, which is obviously massive, especially for options, etc. So a lot of our subscribers done very, very well in this one. I think for new money, however, I think above 135, this does look like it holds some weight here. It is previous support. It's looking like it's showing itself to be resistance as well. So For me, I wouldn't really be looking to buy this dip at the moment. I would just be waiting for that confirmed breakout, close above that level. And I think if we get that, I do think there's a decent amount of upside potential on it as well. Now, I'm not saying that it's going to go back to 240, but I'd rather be aiming for that and hedging my bets on that outcome rather than perhaps shorting the stock like I'm sure some of you are probably doing watching this. CGC is another one at the moment. Wheat stocks I am still bullish on at the moment. I think there's been a bit of a breakout in the ETF MJ, which looks like it may well have found its bottom. So I think for those of you that have been asking about CGC this week, I think the chart is pretty clear. I think we've got a confirmed level here to keep an eye on. Yes, we've had a pullback on Friday. Yes, I've been bullish on Tilray recently as well. But yeah, absolutely, I'd just be keeping an eye on this level here. I wouldn't want to be taking any chances if we get a breakdown below that level. I think that would be the concern. I think we can still be bullish above this level, but below it, probably not so much. GNRC, again, really good confirmed uptrend. We have now broken out above $100. I think the behavior of price here, it looks like it's respecting the 50-day, 50-period simple moving average as well. So yeah, I think it's just a case of you're bullish above $100. If you've been in here, I would just be tightening up stop losses, maybe preserving quite a substantial amount of that profit, and let's hope that starts to kind of kick through the gears, 110, 120, and so forth. But absolutely, the trend is there for all to see. Confirmed breakout in Square Inc. this week. We got it on Friday, so it'll be interesting to see whether or not we get the required continuation on Monday. I think there's going to be a big question mark asked of Square. It's one of those stocks that can get quite a bit of momentum behind it. So let's see what happens with Square on Monday. But it looks like we do have a confirmed breakout there. But I think overall market conditions are the concern. If we continue to see weakness in the S&P 500, etc., then hopefully that doesn't carry over to Square Inc. But it's a distinct possibility. All options are on the table. Zscaler, again, we've had a breakout. We're getting a little bit of weakness now. So it'll be interesting to see. Now, this weakness, absolutely anticipated. We had RSI up at 82, 83. So a pullback would be anticipated. Like any good stocks, good uptrends, pullbacks offer opportunity quite a lot of the time. But I think that the question that we have here is, how deep is this pullback going to go? Are we going to go down as far as testing the $54 level just to make sure that it will hold as support before it moves off again? That's the question mark with ZS at the moment. But absolutely, I would still be bullish on this above that 53.50 level. PayPal, again, this is a trade alert went out to our subscribers at 108. We're up at 116. We're kind of moving towards this profit level at the moment. Given that it's earnings coming up this week, again, get your plan of action in place. I think it makes a lot of sense to start thinking about preserving profits and just going back in again post earnings. Obviously, the danger with cutting your position pre-earnings is missing out on any potential gap up overnight, etc. But I think the kind of view that I take with it is it's a lot easier to initiate new positions in the market than it is to replace lost capital, which can often happen on the back of a gap down. So I don't like those gaps down. I prefer to just take the risk averse approach. That's just me. That's my preference. I'm not saying that you should follow it. Find out what works for you. But that works for me. So I think PayPal, it's starting to make a lot of sense to think about profits. Boeing, again, I said at the start that I would be touching on this one. We've got earnings coming up. It looks like we've had a failed breakdown. Now, what we know with failed breakdowns is we get fast moves going the other way when we get them. So I think with Boeing, given that this is a potential failed move here, the expectation is that this might well rally into earnings. If it doesn't, that's okay as well. I think it would make a lot of sense that if we do get a favourable reaction to earnings, I think actually the chart might be better suited to something like that. Yes, you might have to give up $20 for the safer entry, but absolutely I would just be building this into your chart, and I think if we can get a breakout above that level that's dated back nearly 12 months, I think that would be the catalyst for me to move back into Boeing. And I think we'll only know that post earnings. So if you're out there and you're maybe tempted by Boeing, I think it makes a lot of sense to just wait for earnings to kind of pass before moving in there. Now, American Express is another stock. We've obviously had a breakout here last week on the back of earnings, and I think we just say that we're bullish above 130 here. I think given the gap up that we've had, I think we could probably anticipate a little bit of a pullback. RSI is up at 76 at the moment. It's not massively high or anything like that, but it's just something to just say, if we're not getting these optimal entries into the market, which are just beyond breakout levels, I don't know if I would necessarily want to be jumping in and taking a bit of a gamble that this breakaway gap continues. So let's see what happens with the XP. I think it makes a lot of sense to absolutely add it to your watch list. Now, that's really the weekend analysis for you guys. Hopefully you've got something from it. Hopefully it's going to help you in some way. I don't know what way that is, but hopefully it's helped in some way. If you are out there and maybe you are somebody that maybe doesn't have the time to go through a lot of charts, maybe you would like the support of a dedicated group, maybe you would like to have access to our trading ideas, which I'll touch on in a second. But at honeystocks.com, we have a 12-month membership, and since we announced it 3 months ago, the thing has just exploded. I just did not expect the kind of reaction. I think it's something that I think everybody was kind of waiting for. I think a lot of you, certainly watching this, will have followed me from day one when I started 3 years ago, and you always wanted to come in and just have access to our charting. Well, obviously in the last 3 months, it has been available. There's been a huge uptake on it, and this is what we do. We've got our premium weekend analysis. We have our trading community. I provide bespoke charting requests, and I'll show you what that looks like in just a second. And it's just a really good place. And I think, for a 12-month membership, for all sign-ups at the moment, up until the 31st of January, we are also providing full access to our technical analysis program, which we charge a lot of money for. And I think that kind of speaks for itself. I think for $500, for a 12-month investment in yourself, it's probably not a bad thing, but absolutely, I'll let you be the judge of that. For those of you that maybe don't know who I am, I'm Sam, and like I said before, I'm registered with the CMT Association and working my way towards my charter status at the moment. I also run honeystocks.com, super popular, well-known trading blog website, and yeah, feel free to go and check that out. But like I touched on before, I'm very unique in what I do, because with every single trade alert that I post to our subscribers and our clients, I log them all on our website for complete and open transparency. So you can go in and you can see the types of stocks that I'm recommending. You can see the dates that I'm recommending, the price that I'm recommending it at, and you can go on and see how those stocks have then gone on to perform. Now, the good thing about this is, obviously with being registered with the CMT Association, I have a very strict code of ethics that I need to follow also. So everything that you see with regards our trading logs and the trade idea logs is completely open, and it's there for the world to see, and I don't know anybody else that does this, and I think that's what makes what I do very, very unique. So feel free to please, 2018 is all published, 2019 is all published as well. Obviously 2020 has just started, that'll be uploaded next week, the first month, but you know, it's there for the world to see. But this is what a trade alert looks like, guys. Very, very specific. I'm not shouting out in a WhatsApp group and saying, you know, jump into this, you've got 5 minutes to do it. I have a very professional, dedicated system. I've got an app. I have my emails. So whenever I post a chart, you will have a notification on your phone to say, you know, Sam has posted this, and you can go and have a look at this chart. And you will also have an email alert sent to your inbox as well, just in case you've maybe got your phone turned off or it's on silent or something. So very professional setup I've got, and this is what a trade alert looks like. Nike, I think this got as high as 105, 106, and yeah, it's done very, very well. Again, Starbucks, this is another one around $81. Again, it's been beautiful. Now, the other side of things is I also provide bespoke charting requests. So whenever one of my subscribers or one of my clients requests one of my charts, I will also be on hand to provide my chart, and quite often it can keep you in a trade for a bit longer, maybe get that little bit more profit in place, or maybe just stop you panicking a little bit. And you know, this I think got as high as $65 after I sent that chart to Chris. ENPH, again, this has been a massive winner for our subscribers, and yeah, again, $18. This is up at 34, just about hitting our profit target there, and you know, that's massive, and that's been in the space of a couple of months. So if you're out there and maybe you are struggling a little bit, or maybe you want to learn the technical side of things, I know the market is made up. A lot of you like the fundamental side of things. A lot of you like buying good companies with good balance sheets. But I know there's a lot of you out there that also value the technical input as well. So I think if you're out there and you are somebody that struggles and you want to learn the technical side of things, I think this is a good time for you to learn. You know, we've got our access to our program, which is up until the 31st of January. So I'd highly encourage you to check that out. But if you are looking to, you know, fit trading, or you're investing around a career or a business, maybe you want to get away from day trading, maybe you want better consistency, maybe you want to learn and not just follow others, then I will provide you, and I can provide you a platform to do so, because I know what it's like to go hunting around YouTube and learning from those losses. It's completely soul destroying, and it really doesn't need to be that way. So if you're out there, maybe you want to learn a new way, please go onto our website, register your details at the link below. There's if you've come through on YouTube, there is a link below for you to go on and check that out on our website, and all you need to do is register your details, and we will be right in touch with you. But you know, wherever you are in the world, whatever you're up to, please enjoy the rest of your weekend, and maybe we'll speak to you soon. Thanks.